It's modestly higher. It's 2,100. This is a milestone day. I've covered this company for 20 years now, and it's gone up, it's gone down, and it's had an enormous amount of volatility. What's happened this year, however, is that we've reached, after 2 decades, record high gross margins and record high operating margins because, as Josh was mentioning, the influence of these really high margin businesses and high growth businesses, advertising and AWS. This is a different Amazon than we've seen in the past. We think this kind of valuation here is sustainable. We think it's a buy from here. It's a small buy for us. But nonetheless, I'm more in awe of what I'm watching, and having watched it over the decades, you know, hats off to the management team.
Tuna, you have a $2,200 price target, a little bit of a raise. But when a company adds $65 billion in market value in 5 or 7 trading sessions, does that make you swallow hard?
Well, it does. I think it certainly gives a reason for pause. But as you alluded to, we're at 2,200, which is modestly higher. But I think the key here is that the thesis has really, we'd argue, reached somewhat of a positive inflection point. If you kind of rewind a few years ago, there was these major concerns with the earnings and cash flow volatility. Today, I think the company has successfully transitioned into kind of what I would call a steady state, model where, all of these higher margin streams of revenue are essentially poised to continue. But I think even beyond that is the disruptive impact that the company is having through organic growth and targeted acquisitions. I think they have pretty much, shown that they can be very disciplined to execute on that front. I think that's why I think the company deserves a new look here from investors that have been skeptical. I would also point to Amazon Web Services that we think accounts for at least a third of that $1 trillion in market cap.
The existential risk, though, to technology, Mark, at this point may be Capitol Hill. I mean, just last week in the Bloomberg interview, the president said that these companies, including Amazon, are in a, quote, very antitrust situation, that he won't comment on whether or not any of these companies should be broken up. But the fact that he won't comment on it, he threw it out there. How concerned are you that, I understand Amazon is not one of the companies called to Capitol Hill tomorrow, but that Amazon falls straight into the crosshairs of the president and congressional leaders, maybe just because of its size?
I think that's absolutely a big risk. I think there are 2 major risks here with Amazon. One is regulation, and one is competition. And really quickly, in that cloud computing business, I mean, they've got 2 massive competitors in both Google and Microsoft. So I think that's the area of greatest risk to the story going forwards. And then in terms of regulatory risk, the one advantage that Amazon has is at the end of the day, they can still go out and say, well, look, we're 2% of total retail sales. Tell us what's monopolistic about that. But nonetheless, when they're going to be these platforms are getting bigger and they're more powerful, they're more influential, and they should be right. They should be at least scrutinized for potential abuses of power. I haven't seen that in the case of Amazon, but the larger the company, the greater the potential. They should be scrutinized.